Let's quickly understand what are the various types of cost when we are doing business. See, here you need to understand certain key terms. First being your expenditure. What is expenditure? See, expenditure is a payment or disbursement. What does that mean? It is the outflow of money which is happening in your business. Okay, so this is not just your cash, it would also include any kind of check payment which you are doing. For example, if I am buying 100 meters of cloth and I need to pay 1 lakh rupees. So if I do a check payment, if I do an online transfer, if I give him a Paytm transfer, all this would be a expenditure for business. Okay. Now then, what is an expense? See, expense is the value of resource that was used or is necessary in order to earn the revenue during the time period. See what happens when I want to sell the goods in the market. I need to process it. Let's say when I bought the cloth, I need to process it. I need to prepare a garment. Now, garment you would have seen. Let's take an example. If I have to prepare a t-shirt. So I went and bought the material. Then I would require once I have the cloth, I require the thread. I require those buttons which are necessary when we are stitching. Then I would require a tailor to stitch. So all these expenses would be necessary to ensure that I am able to prepare the t-shirt and earn the revenue by selling it in the market. So expense is the value of resource that was used up or was necessary. Whatever cost I incurred for all preparing a t-shirt would all count as an expense. Okay. Now remember, cost of goods that was sold during the period are considered to be expenses. So for example, preparing this one t-shirt, whatever expenses went into that would be the cost of goods sold. Okay. And I would also include in that the cost of advertisement, the salaries I paid to my employees or workers, the interest, commission, rent which came in or which went out, that is if I have rented the property, so the rent paid. Okay, if I had to give any kind of sales commission, so everything has to be included when I am calculating this expense. Okay, now let's understand the difference between expense and expenditure. See, expenditure, as I told you, is a payment which is being made. Expense is, for example, if I am selling 100 t-shirts in a particular accounting period, my accounting period being April to March. So if I am selling 100 units of t-shirt, whatever was the cost incurred to prepare those 100 t-shirts to be sold in the market would be an expense. When it comes to expenditure, whatever payment I did for these expenses would be counted as expenditure. Remember, expenses are incurred but the costs are derived. Okay, so whatever we are incurring is your expense, the cost is generally derived in the business. Now let's understand the startup cost. See, what is the startup cost? Now when you start your business, what happens here, that you need to complete certain formalities before you start your business. For example, if I have to start a garment business, I need to get my licenses which are required from the government, right? I need to require the permissions which are necessary. So I need to form a company, so there would be certain legal expenditure, there would be certain formation expenditure. So all this comes under startup cost. This is basically to set up your business, what was the cost incurred by you. What is operational cost? See, this is the cost which is necessary to incur to keep your business operating. So this would include your fixed and variable cost. For example, your factory, then you would have your machine. You need to produce the goods from those machines. So there would be certain fixed costs and certain variable costs which would be incurred when you are operating your business. These are known as operating expenses. See, it is very necessary that you understand what is the difference between the fixed or variable cost. So when you are classifying a cost into a fixed cost or into a variable cost, you need to understand to which industry it belongs. Now let's see, I have a postpaid connection for my business. Okay, so there would be a fixed monthly rental which I have taken, monthly rental plan from, let's say, Vodafone. So I've taken a monthly rental plan wherein I need to pay them 1000. So that's a fixed expense for my business. So telephone bill would become a fixed expense. But then if I'm referring to a business of call center, then telephone expense would not be a fixed expense. Okay, so you need to understand for which industry you're working, for which industry you're classifying the cost, and on the basis of that you will make a decision whether the cost is a fixed cost or variable cost. Let's take another example, paper bill. In an office or shop would be fixed. See, many offices you would have gone to, or you can check out where you go in, there would be a newspapers which would be lying there. So every day the newspaper boy comes in and he would be delivering, let's say, 10 to 12 leading newspapers of the country. So for an office or a shop it would be a fixed expense, but in a printing business it becomes a variable cost. Why? Because it is like a raw material out there. Okay, now in terms of paper bill, I took an example of newspaper. Let's take another paper example. See, the paper which we require for printing, when it comes to shops, offices, generally this expense is known and it's a fixed expense that you would be incurring X amount. But here, if I'm giving you an example of printing business, if the number of customers increases, then it would be a variable cost here. Why? Because the amount of paper required as raw material would increase. Now, water expenses, so water is required in every office, it is fixed. Okay, but when it comes to soft drink factory, it would depend on the sales. So then in that scenario, water would be a variable cost. Okay, so you need to understand how to classify a fixed cost and a variable cost and not get trapped in classifying an expense in one or another category. So it shouldn't happen that if it is a variable cost, you ended up classifying it fixed cost, because then it would be resulting in errors and you would not be doing the correct analysis of your business. Okay, now let's understand what is income statement. See, income statement is a statement which helps a business to determine how much profit they have made for one accounting period. So generally, like in India, we follow the April to March accounting period. So we will understand through income statement, which is also known as profit or loss statement, as to how much loss or how much profit the business has made. Okay, it is also sometimes known as statement of operations. If you want to understand more on these things, you can do one thing, you can download an annual report of any company and try to see how the income statement or profit or loss statement looks like. Okay, so basically in our income statement or a profit or loss account, you would see revenues on one side, expenses on another, what are the gains, what are the losses. There would be entries related to sale of fixed assets if it is a gain or if it is a loss. Okay, it will not show cash receipts because we have a cash register to record that. Okay, neither it will show any cash disbursement because that would be shown in cash register. Now, period of time, when I'm talking about, if you see my first line, it says that it determines the profit over a period of time. Now I gave you an example, accounting period. Okay, so remember, for every business this will vary. Now let's take an example. In India we follow this April to March. If you go to US, accounting period or the period of time is January to December. So for every business this period of time differs. Okay, now what is profit in the income statement? At the end, I will derive whether the business is into profit or loss. Profit is nothing but your total sales revenue minus your total sales expenses. We have prepared all these income statements in detail in the accounting chapter, accounts for sole proprietor. So we will understand how to prepare this in detail under that video. Now let's do cash flow projections. See, you need to understand how the money is coming into your business and how it is going out, okay, during a specific time period. So cash flow projections are nothing but projecting what would be the movement of money in and out of the business, okay. So what are the inflows and outflows, let's say from April to March, so you will project that, and that would be the cash flow projections. So basically a cash flow projection will tell us how much is the cash expected to come in the business and how much we are expecting the cash to go out of the business, okay. In this scenario you get an idea about how much capital you would require. See, I gave you an example that you started a business, 1 year down the line you're getting too many orders, okay. Let's continue with this garment business. Apart from Shoppers Stop, now you have Lifestyle, you have Myntra, who all have approached you to sell them the garments which you manufacture, but then they have different varying credit period, whereas the suppliers have a fixed credit period. So let's say Shoppers gives you the money, that is for the sales you make to Shoppers, they give you the money in 15 days, Lifestyle takes 30 days, Myntra takes 60 days, but your supplier needs to be paid in 30 days. So then you would require some money as a cushion so that you can pay to the supplier by the time the sales which you have made to Myntra, the money gets realized from that. So when you're doing cash flow projections, you will get an idea about the working capital which is required, and hence you can approach for a loan, or maybe you can invest more capital in the business, okay. Whatever is the difference between the cash flow projection and the cash flow statement, we need to understand that, okay. Now remember, when I'm talking about anything which entails projections, that means it is I'm talking about the future, a future what would be happening or what can happen. When I'm talking about cash flow statement which we prepare, I am giving a historical figures, what has already happened, okay. Now remember, cash flow projections would show the cash that is anticipated to be generated or expended over a period of time. So I'm basically saying how much cash I would be earning through the activities of the business, okay. I'm projecting that. When it comes to cash flow statement, what I actually earned or have earned already in an accounting period would be shown in my cash flow statement.